Right. Welcome everybody. Thank you for joining us for the webinar of Australia's visitor economy in 2025. My name's Garrett Parker. I'm from Tourism Research Australia, and I'll be presenting this with my colleague Corinne Rose. And we also have Bronte Rice-Jenkins as well, who will be answering questions on Slido and making sure that everything works nice and smoothly today. For those who aren't aware, we're from Tourism Research Australia, which is part of the Office of Tourism and the Visitor Economy at Austrade, and we provide the official tourism statistics and research for Australian tourism. Our team's role is through the analysis and communication that we do to better equip yourselves, industry and government with the data and insights needed to strengthen marketing, business decision, policies and strategy. Today, we're going to be presenting one of our latest publications, the annual benchmark report, and we'll just be going through some of the key aspects of it. The whole report is free to download on our website and goes into greater depth than we will be covering today. So please do check it out at tra.gov.au. Next slide, please. Before we start, I'd like to acknowledge that we're joining from many and varied lands across Australia, and we have a few tuning in from beyond Australia as well. So I'd like to firstly begin by acknowledging the traditional owners of the land on which we meet today. I would also like to pay my respects to elders past and present. Next slide, please. So this is just an overview of what we're going to be talking about today in very minimalist terms. Obviously, there's a lot more detail going into each of these areas. So firstly, just looking at all up 2025 in review, how that looked at from a broad perspective, what went on. Then getting into the tourist, so the demand side of things. Firstly, they're looking at the domestic side. I'll be running through that. Then I'll be passing over to Corinne to take us through the international perspective. And that includes global comparison as well as outbound from Australian tourism. Then the industry, the supply side of things. What does that look like across investment, accommodation, aviation, and more? And finally, we'll wrap up with the outlook. What do our forecasts say? What do we see as some of the influential factors? What's the core base of the Australian tourism offering looking like going into the future as well? Throughout all of this, I'm sure there will be questions. I think it's great to have questions. Please do send them through. The way we found best to answer this, and I'm sure many of you are familiar with Slido by now, but please do go to slido.com, and then that's the code that you put in, TRA benchmark. This way, as there's questions that pop in, you can upvote questions that you think are really good to make sure that we do get to them in time as well, and pop your own questions in. And I think you can do it anonymously as well if you really like to, or you can put your name to it as well. So that's just a really great way to use the Q&A, and we'll address those at the time we've got at the end as well. But just before we get into that and everything around it as well, I guess just wanted to highlight that this report is really those insights into 2025. So we produce this as an annual report, really looking to explain the major developments in the visitor economy, highlight the challenges and opportunities for the visitor economy as well, and help the industry and governments understand and adapt to the changing demand and supply environment. So this report is actually a compilation of several other sources of information that we produce across the year, as well as others do as well, and kind of tying it all together in one succinct benchmark report. Next slide, please. As this is the 2025 report, it focuses on 2025. And as you're all very aware, there were some unexpected challenges that emerged in early 2026. So the Middle East conflict that commenced in the first quarter of 2026, which is having an impact on the visitor economy and the global economy, is not so much captured in this report, except in some of the bit at the end where we're talking about some of the outlook around what we're seeing as well. But this really highlights the conditions of 2025 and focuses on that and learnings from that as well. Nevertheless, understanding the drivers behind these trends and challenges in 2025 may assist the sector to continue to adapt and maintain this momentum into 2026 and beyond. So with that sort of setting the scene, kicking off just in terms of the overall visitor economy. Well, 2025 saw the visitor economy showing strong momentum. We did see that domestically, there were some real kind of changes in the air. So overall, domestic trips did increase, but this was very much driven by day trips, with domestic overnight trips almost remaining flat when we look at a year-on-year comparison. Internationally, saw continued growth. What was really great about that growth from the international side as well is it wasn't just dominated by 1, 2, 3 markets, but it was actually coming from a variety of source markets. And the visitor spend in Australia was significantly higher than we've seen previously as well. So we saw people coming from more markets and spending more. When we look on the supply side of things, all the supply side metrics that we capture and report on and look at, all of them increased. So when we looked at things across the latest jobs data, which actually we just released last week, the March quarter 2026 report on that as well, we now see that tourism jobs as a share of the total economy is back to where it was historical levels as well, but even wider than that as well. More flight routes, more connections, more accommodation, increase in the number of jobs, slight increase in number of businesses, and increase in investment overall as well. But jumping into what does that look like in the numbers? So total spend in Australia in 2025 was $192.4 billion. And this came from overwhelmingly that big darker purple size of the pie is the domestic audience, accounting for 80% of that spend, with 20% coming from the international. You can see there on the left-hand side, some of those key metrics as well. International visitor arrivals increased by 8% to nearly 9 million. Domestic overnight trips, as I said, pretty much flat, technically up 0.2% overall. And while the domestic day trips really lifted a lot, up 9% overall. Putting it all together, that spend in total up 6.5%. And when we split that out across the international and domestic, you can really see the breakdown of how that comes out. So domestic really coming through from the holiday market in a big way. Visit VFR, visiting friends and relatives, also being a significant chunk. Nevertheless, business, relatively small, still nearly $18 billion though, still a massive part of it as well. And other as well, which we'll get into in more reports, but other is kind of traveling for reasons that aren't holiday, VFR, and business. So it might be for medical visits, other things like that as well. Still 10 billion there too. On the international side, the two dominant bars there being the holiday market, accounting for just under 13 billion, and the education visitors as well. So that's education here for less than 12 months all up, and that being 14.5 billion as well. So quite a good spread across the different ways that money is coming into the visitor economy in Australia. Next slide, please. When we look at overall, though, that's on the sort of demand side, on the supply side, how are things looking? Well, first up, what is tourism's contribution to GDP on the left-hand side there? $81.1 billion. And that is 2.9% of Australia's national GDP. Tourism is a massive part of Australia's economy and the GDP overall. These other core metrics have pulled out about the supply side. You can see that coming through there too. When we look at our tourism investment monitor that we publish every year, $74.5 billion in projects coming through. Tourism-related businesses, 1 in 8 businesses in Australia are tourism-related, 361,000 businesses there. And technically as well, it was a record high. It went up 0.1% overall, but Corinne will expand a bit more on the supply side of things. And jobs as well at the end of 2025. This is direct jobs, 736,000 as well, which is also the highest number ever of jobs in the tourism sector too. So both across the supply and demand side, quite a strong end to 2025. But getting into specifically on the domestic side first, if I can have a click there, thank you, onto the analysis of the demand trends that we're seeing for domestic. Firstly, there was a pretty significant change that we did at TRA in terms of how we capture and measure data. And if you want to give me a click there, please. What we moved to in 2025 was the domestic tourism statistics. So for many of you who have been around the world of tourism for a while, you'd be familiar with the National Visitor Survey. That ran until the end of 2024, from 1998 until the end of 2024. Then it's been replaced in 2025 with the domestic tourism statistics. And this was a pretty necessary update. The National Visitor Survey was working as a telephone interview survey. Domestic tourism statistics completely modernized that offering, where we're bringing in external data sources as well as survey-based data to create the new tourism statistics. So as it says there, we're combining large-scale mobility data, which gives us a much better and more detailed read in terms of movement of travel, where people are going, how long for, is it a day trip or not, combining that with survey data as well. So survey data is still happening. Instead of being telephone though, we're actually going face-to-face, door-to-door, and then recruiting people from that as well onto online as well. So it's a mix of face-to-face and online, and that is working really well. What's good about this new method as well, using the dots, is that it has been designed so that new data sources can be incorporated into this as they become available. So other mobility data, potentially financial data, other things in the end as well. The big implication of this, though, is with a huge methodological change, there are implications for comparison between NVS and DOTS. So we have backcast the key metrics using DOTS, so trips, nights, and spend, at a state level and at a national level, but other things are not really able to be compared apples to apples so much. So as we get more data, we're able to dig in more and more. And what's great with the DOTS way as well is that we're able to see greater granularity than we had before. So for example, LGA level data, previously we could only do that by combining 2 or 4 years worth of data. Now we're able to do using just 1 year of data because we have the mobility data, which is much more granular, to be able to see up to, I think it's over 400 of the LGAs on an annual basis now, with trip and night data available for that as well. And then more detailed data of about 100 of the LGAs too. So that's been really useful in terms of how we can expand this offering and develop it more there too. So with that, jumping on to the next slide in terms of a bit of a travel snapshot of the domestic market. So as you saw from that overview, domestic tourism is a key contributor to tourism in 2025, accounting for 80% of that overall spend. Here's the breakdown of what that looks like. So the domestic overnight market there, you can see 113 million trips, but the domestic day trip nearly, well, 2.5 to 3 times higher than that at 277 million trips. However, as kind of obvious, people spend a lot more on a domestic overnight trip. And you can see that on the far right-hand side of the column there. The average spend for an Australian on a domestic trip, $945. But even a day trip, average spend being $167. So it's still a fair bit there as well. I think what's really interesting though is comparing that to the number of outbound Australians as well, and then also our international visitors also. So the outbound Australians there, I think spending, looking at the spend side of things, coming through at a bit higher than the international visitors that we do get there as well. On to the next slide. And diving in a bit into the domestic overnight travel overall. Now, domestic overnight tourism is a huge part of the overall spend of tourism in Australia. So when it remains stable, it has a significant impact overall on the largest size and spend of the visitor economy in Australia. And as we said, it was up 0.2% on 2024. So pretty steady across the year. What happened though as well, as you can see on those 4 kind of little icons there as well, overall spend was actually down 1.9% or 2%. And the average spend per trip was down about 2% as well, while the average length of nights was about the same. Now, anecdotally, this fits with what we've heard operators and different states and territories saying that yes, while people are still traveling, Sometimes it'll be shorter trips, or if they are traveling, there's slightly less spend, perhaps less eating out, one more meal at home, buying breakfast cereals instead of eating out for breakfast, these kind of things as well. And this is a bit in response to, the increased airfares, high cost of living pressures, as well as some environmental events as well that impacted domestic travel. We had a couple of large-scale natural disasters last year as well, so that also influenced people's actions around this time too. Jumping though to the domestic day trips, as I said at the beginning there, we're seeing that they're really jumping up. So day trips overall increased by 9%, and the average spend was up by 9.5%, 10% overall, where total spend was up nearly 20% on the day trips. So what this really goes to show is that we are still traveling. Australians are still going to travel. They're going to keep on traveling as well. But how they go about that is changing, and it is reacting to economic conditions as well. So day trips domestic day trips are, increasing as a viable option there, whereas we're seeing that domestic overnight trips maintaining that sort of steadiness overall. Next slide, please. We dig into the report a little bit more this time around the amount of people going to regional Australia on their trips here. These percentages shown in each of the states and territories are of domestic trips, how many of them went to a regional part of that state or territory. So from over on the left-hand side in WA, 45% of the domestic trips there involved some aspect of getting outside of the cities and going to a regional part of the state. The highest there being for New South Wales, 72% involved going to a regional part. And it just really goes to show that regional tourism is a significant tourism drawcard, and that tourism is really important for many regional areas. I think what's really interesting, and again, we've got this in detail in the report, is that breakdown about how that pans out across the tourism regions of Australia as well. So you can see in every state and territory, the top tourism region is the capital city. And so the capital cities do remain really popular destinations for domestic overnight travelers. But what we do see as well is those regions that kind of rise up across each state and territory, how many people went to them on their trip there. And I think two, really stand out, being down in Tasmania, the second highest one there being Launceston and the North, 35% of all visitors to Tassie, domestic visitors to Tassie also going there. And over in WA, Australia's southwest, 28% heading out there as well. So you can see that nice spread that does happen across there overall to the regional levels, and then specifically which regions are really gaining from that too. Next slide, please. The interesting thing I also that we found when we were kind of looking into this as well is the difference in spend. How money hits the regions versus how money hits a capital city area. So this bar chart here is splitting out just percentage breakdown of expenditure per item for people who go to a regional area, the rest of Australia, versus people who go to a capital city and Gold Coast. And the first thing you can see there, go from highest to lowest by regional spend, is that higher spend for accommodation in regional areas. What was kind of interesting as well when we looked into that is that accommodation, while it's the highest spend, it really kind of splits out a little bit in terms of the types of accommodation. So it's much more of a broader variation of commercial accommodation types compared to capital city nights as well. The other big standout there is airfares for the capital cities and Gold Coast being a huge chunk of the spend there overall, which is not as much for the regional areas. But as you can see, third highest for regional areas is petrol. So that transport cost there is still certainly up as a key aspect of it overall. Next slide, please. And when we look just, as a big chunk of it, like what is that spend kind of falling out like across domestic overnight trips overall, but regional? Well, 49% of all domestic overnight spend was spent in regional Australia. So while the average spend amount is lower, about $230 per night versus $353 in a city, it's still huge. It's a huge part of the overall spend in the visitor economy, as well as just a big impact for regional Australia and really core aspect of Australia's tourism offering too. Again, we dig into this a bit more in the report. It's probably not unsurprising, but it is kind of interesting just to look at that, nature-based activities are much higher among those going into regional areas. In contrast, arts and heritage activities and attending festivals are more likely to happen in capital cities as well. All right, on to the next one. And here I'll hand over to Corinne to run us through the international visitor economy side of things.
Great, thank you, Garrett, and hello, everyone. Yes, so turning now to look specifically at international travellers to Australia. So 2025 was a good year overall with a positive change in a range of summary metrics. So there was growth in the number of international visitors coming to Australia from a range of source markets, as Garrett mentioned, and there was record high spend in Australia by international visitors. So international short-term visitor spend in Australia reached $39.2 billion, which was 19% higher than the previous year, or $6.3 billion more than the previous year. The strong growth in international visitor spend was thanks to Australia's high spend travellers. So in 2025, travellers on average spent more per night while in Australia. And as with on the domestic side, we also looked across tourism destinations all across Australia and saw that the growth in international spend was shared broadly across a range of Australian destinations. So for example, growth in international trip numbers was particularly strong for WA, up 23%, the Northern Territory up 15%, Tasmania up 10%, Victoria up 10%, and Queensland up 10%. And when we look across the regional Australia compared to capital cities, we see that growth in international visitor spend was shared across regional Australia, and in fact increased by 21%, which was slightly faster than the pace of growth in international spend in the capital cities. One of the categories of traveller that contributed to the strong growth in international spend in 2025 was working holiday makers. These travellers stay for a long time and hence have a high total trip spend. In 2025, there was strong growth in the number of working holiday makers. So there was faster growth in that cohort than the non-working holiday makers. And working holiday makers are particularly valuable for regional Australia. So in 2025, they accounted for 20% of the international spend in regional Australia, while working holiday makers accounted for 10% of international spend in capital cities. So they accounted for double the share of spend in the regions. When we look at the strong growth in spend, a few key source markets stand out. So namely China and the UK, but we also saw strong growth in spend from a range of other markets, including the US, New Zealand, Hong Kong, and some European markets. And as you can see, these are pretty much the most significant markets for most Australian states and territories. So for every state and territory, it's either the UK, the US, or China that's the largest source market in terms of trip numbers, except for Queensland, where it's New Zealand. And that largest source market across each of the states and territories remained unchanged in 2025 compared with the previous year. So looking specifically at China, so as you know, there was strong growth in visitor arrivals from China in 2025, and Chinese travellers were once again the largest spend market for Australia. The value of spend by Chinese travellers increased by nearly 40% in 2025 and reached over $11 billion. So this accounted for more than 1/4 of total international spend in Australia. So it's a very significant market. The UK market also contributed strongly to growth in spend. So there was a sharp increase in the number of travellers from the UK related to the highly successful British and Irish Lions rugby tour, which really highlighted the power of major international events to attract travellers. These travellers stayed longer than usual and reported a 10% increase in their average spend per trip. The benefits of the rugby tour were felt wide across Australia and really moved the dial in terms of tourism numbers and spend. We have a case study on this event in this year's report. By purpose of travel, there was growth in both the number and value of international trips for all the main reasons for travel, except for business travel in 2025. So education provided the biggest contribution to spend, accounting for 37% of spend. The next largest category was holiday travel, and it's worth noting that the 33% share there varies markedly across capital cities and regional Australia. So holiday travel accounted for 30% of spend in capital cities, but accounted for a much larger 51% of international spend in regional Australia, where the education share of spend is much smaller. VFR travel continued to perform strongly in 2025. So the number of international VFR trips to Australia continued to trend higher and surpass its previous peak. And it's expected to continue rising, supported by Australia's growing internationally born population. So in 2025, Australia had a population of 8.8 million residents that were born overseas, or 32% of Australia's population. Australia has large populations of people born in India first, England, China, and New Zealand. And we also have very large and rapidly growing populations of people born in the Philippines, Vietnam, Nepal, and Malaysia. And then lastly, for business travel, so the only purpose of travel that saw a slowdown in 2025. So there were fewer international business trips and the average length of those trips declined. And that continues a trend that we saw in the previous year when business travel budgets seemed to put pressure on business travelers to condense their itineraries. And in 2025, total trip spend declined for business travelers due to shorter trips, but the average spend per night actually picked back up and increased by 9%. It is interesting that within the main trip purpose of business, travelers can identify whether their trip purpose was business, or convention or conference. And that detail highlights that the number of international travelers to Australia for the purpose of conference or convention actually increased in 2025, and spend by those travelers increased in 2025. Whereas the overall decline is just due to the business travelers. Now, if we use TRA data collected from business events questions embedded into the IVS and DOT surveys, we can see that in total, across international and domestic travellers, there were over 20 million visitors that attended or accompanied attendees to business events in Australia in 2025. And this generated over $17 billion for the visitor economy. So it's a large market, and it's dominated by the domestic side. But it's also interesting that the international business event visitors are high spend travelers. On average, they spent 50% more per night compared to an international leisure visitor. And now I'll turn briefly over to the global and outbound travel trends. So globally, international tourism arrivals reached a record high in 2025 of 1.5 billion. That was up 4% from the previous year. Now, the growth rate in global international arrivals was a bit slower in the last year compared to the previous year, where it was 11%, but still indicates ongoing demand for global travel as people continue to prioritize travel. By region, Asia and the Pacific and Africa were the fastest growing regions in 2025, while the Americas was the slowest. In the Asia and Pacific region, growth was driven by the North Asia region. So you can see the recovery of China having a big impact here, while global international arrivals to the South Asia region declined. So that includes the India subcontinent. The very mild growth in the Americas region reflected a 1.4% decline in global international arrivals to North America. And it's worth noting that arrivals to North America was still 7.6% below their 2019 level, according to this UN tourism data in 2025. So when we look specifically at Australians travelling overseas, we saw continued strong demand for outbound travel, and outbound travel is dominated by leisure travel. So 86% of outbound trips were leisure trips, and the most popular destinations in 2025 were again New Zealand, Indonesia, New Zealand, and Japan, while fewer Aussies went to the US last year. So that was my quick tour through the demand side. As you know, there's more in the report. But now I'll turn my attention away from demand side trends onto supply side trends. And so we look across a range of metrics that capture the businesses that make up the visitor economy, the people employed, and the infrastructure that services travelers. And this table summarizes those capacity metrics. And I'm going to step through them all over the next few slides. So we'll go through slowly, but you can see across this broad range of metrics that across basically everything, capacity expanded in the visitor economy in 2025. So that's all the purple up arrows on the right-hand side that you can see. So expanded capacity means that we could service more travelers, or we could better service the needs and wants of those travelers to ensure they have the best possible experience. So looking first on the accommodation side, commercial accommodation capacity increased to a record high of over 340,000 rooms in 2025, and the average occupancy rate continued to trend higher, averaging 72.9% over the year. The increase in accommodation capacity was almost 3,000 additional rooms, or 0.8% nationally. Across the nation, South Australia saw the biggest increase in capacity at 2.2% growth, followed by Victoria 1.6% growth, Queensland 1%, and New South Wales 0.8%. Nationally, there has been the most growth in the luxury category of accommodation rooms. And in terms of the occupancy rate, as I said, it trended higher in 2025, and it was particularly high through October and November. And towards the end of 2025, we also saw the average daily room rates charged trending up and the revenue per available room trending upwards across all the states and territories of Australia, except for the Northern Territory, where they have a slightly different seasonal pattern. Now looking at aviation capacity. So in 2025, we had more international seats available and more domestic seats available. Domestically, Qantas and Virgin added domestic flights later in the year because of high demand. We saw the increase in aviation seats occurred alongside an increase in the seat utilization rate or load factor as well, which supports the assessment of higher demand for seats. We also show in the report that domestic airfares stabilized in 2025 and were often lower compared to the previous year, while domestic airline performance measures improved, i.e. better on-time performance and fewer cancellations nationally. So these all suggest a return towards more normal operating conditions after a prolonged period of supply-side constraints for airlines. Internationally, aviation capacity into Australia increased by 7.5%, bringing an additional 1.9 million international seats online. And the aviation load factor also increased to a record high of 82.6%. The growth in international inbound seats varied across our source markets. We saw additional seats in from growth markets in Southeast Asia and Northeast Asia, as well as from Europe and the Middle East, while there were fewer seats into Australia from South Asia and North America in 2025. In terms of flight numbers, we saw a record high number of flights into Australia in 2025, with our largest inbound markets being New Zealand, the UAE, Hong Kong, Singapore, Malaysia, and Indonesia. Next, we found that total number of jobs generated across Australia by the visitor economy reached a new record high, meaning more people employed in tourism than ever before. At the end of 2025, there were 736,800 jobs in the tourism sector, which was an increase of more than 33,000 jobs over the year, or 4.7% growth over the year. And it's important to note that the pace of jobs growth in the visitor economy was much faster than in the broader economy. So the number of filled jobs in the broader economy increased by just 1.3% over the same period, meaning jobs growth in the visitor economy was like 3 times faster than the nationwide average. The report includes some detail on the growth in tourism filled jobs by sub-industry, which shows that the accommodation industry led the growth in 2025, while there was still growth in many other industries as well, including cultural services, sports and recreation services, and air, water, and other passenger transport. On the other hand, in some tourism-related industries, there were fewer jobs in 2025, or industries that had fewer jobs than they did back before the pandemic, suggesting ongoing challenges from issues such as economic conditions, workforce and skill shortages, and changing customer preferences. The ongoing skill shortages are covered in more detail in the report, but overall we suggest there's been an easing in skills shortages. And we can see on this table the sharp decline in outstanding job vacancies in December 2025. So we have a downward arrow, but it's a good sign because it implies there are fewer businesses still searching for additional staff. So the online jobs vacancies for tourism-related roles shot up quite high in the post-pandemic years, but in aggregate have been declining in 2024 and again in 2025. And this chart shows that online job vacancies for tourism-related industries decline on average across the year by 7%, which is a slightly smaller decline than for all jobs across the whole economy, which declined by 11%. This chart also shows the level of job vacancies in 2025 relative to what they were back in 2019, which is showed by the 100 line. And so the level of online job vacancies for tourism-related roles was still a lot more elevated than for jobs in the whole economy. So job vacancies for tourism-related roles were 48% higher in 2025 than they were in 2019. Across tourism-related sectors, online job vacancies remained highest in 2025 for cafe workers, cooks, and kitchen hands, which aligns with the occupational shortage list, which continued to flag nationwide shortages in a range of tourism-related roles. In response to these ongoing skills shortages and aligning with the priorities of the Thrive 2030 National Visitor Economy Strategy, there were a range of policy supports in place in 2025. These included fee-free TAFE programs, apprenticeship incentive support payments, and visitor economy occupations being eligible for skilled migration. The new visitor economy jobs platform, eager, was also launched, which is a broad and very valuable platform for visitor economy businesses, especially employers and job seekers. Then lastly, on the supply side measures, we saw a mild increase in the number of tourism-related businesses and a much more convincing increase in the number in the investment pipeline, which indicates the continued prevalence of optimism about the future of tourism in Australia. So this data on tourism-related businesses comes from TRA's annual tourism business report. So these stats should be familiar to those that read that report. And it shows the total number of tourism-related businesses trended higher in 2025, but that the growth was stronger when we restrict focus to tourism characteristic businesses, which are those businesses in industries where visitors consume at least 25% of the output. So it includes industries like accommodation, but excludes some broader industries like retail. We note that the survival rate of tourism-related businesses for the 5-year period from 2020 to 2025 was 56%, which was lower than for all Australian businesses, which was 63% over the same period. And related to this, we look at one of the ongoing challenges for tourism businesses in 2025, which was the continued pressure from rising costs of doing business. And this chart compares the growth in costs of providing accommodation and food-related services, which are two key tourism-related industries, with the growth, and it compares those with the growth in costs of providing all outputs across the economy. So the cost of producing all outputs in Australia increased by 3.5% in 2025, which was slightly less than the rate of growth in the previous year. In contrast, growth in the cost of providing tourism-related outputs was higher, and the pace of growth actually increased in 2025 compared with the previous year. And because higher logistics, energy, and insurance costs are often cited as key contributing factors for rising costs of doing business, it's likely that the costs of doing business for tourism experience operators and for tourism businesses involved with transportation may have grown faster than the cost of doing business for the industries we can show here. But returning to the long-term focus, the number of large tourism investment projects has continued to increase each year, as measured by TRA's tourism investment pipeline. There were 336 projects in the investment pipeline, which was 17 more than the previous year, and the project value reached $74.5 billion, up over $11 billion compared with the previous year. This investment pipeline is important because in addition to enhancing the tourism offerings by upgrading airports, adding attractions, and adding to the accommodation offering, increased investment indicates optimism about the future of tourism in Australia. We also see that all states and territories saw growth in the value of their investment pipelines, except for the Northern Territory, where we note that our methodology only captures those very large projects worth over $20 million. Victoria and Queensland in particular saw the strongest growth, with investment ahead of the 2032 Brisbane Olympic and Paralympic Games supporting Queensland's investment pipeline. And that is it from me. And so now I will hand back to Garrett to take you through the outlook from here. Thank you, Garrett.
Awesome. Thanks very much, Corinne. Just a quick comment, just to mention again, if you can pop the questions in Slido, there's a link to it in the chat there, because our colleague Bronte is jumping in and can answer the questions as we're going, just to make sure that we do get to as many questions as possible. So the link is in there, and then the password is TRA benchmark, which is also in the chat. So if you can copy paste your questions over, then we'll be much likely to be able to answer them in time before we wrap up today. So jumping into the visitor economy outlook, going into 2026, it was looking relatively positive, pretty stable. There was good local and global love of travel. However, the Middle East conflict kicked off in late February 2026. That obviously had significant impact on flights, jet fuel prices, local diesel and petrol prices, and we're still seeing that through today. And I know we don't need to reiterate that to the people who are online here today, but as we all know, this has had an impact on aviation, tourism, transport, and travel decision-making. And so it's too early to confirm what will be the full impact of this event. We can start to see from data that we do have from March and April, and May through domestic mobility data, overseas arrival data from our friends at the ABS as well, that domestic and international travel is being impacted, but it certainly has not halted. And even international travel through the Middle East has continued. And travel's going to keep playing that important role it does, connecting people, supporting businesses, encouraging investment, strengthening those family bonds, and improving that mental health and well-being. So we do see travel still continuing through this as well. On to the next slide. How we've kind of framed it, I guess, in the benchmark report is that Australia's tourism sector has positive fundamentals with an uncertain outlook. So there is firstly many different factors influencing this, but the rise and high and rising popularity of sporting, music, and cultural events as incentive to travel are likely to support travel decisions going forward. We've already seen with next year, we've got the Rugby World Cup coming to Australia, and it's set a record breaking 750,000 tickets sold in the pre-sale. Fans from 135 countries buying tickets, obviously Australia being the #1 nation for ticket purchases there. But nevertheless, geopolitical, economic, affordability considerations are likely to have an ongoing impact in 2026. And in this environment, the positive fundamentals of the Australian tourism offering for both the domestic and the international side of things, offering that safe, clean, friendly, unique, and aspirational travel destinations, it's incredibly powerful and important. The effective promotional work that is done to grow markets and attract visitors to Australia, is doing a great job of driving that sentiment as well and pushing that aspect of Australia as a positive reputation as a destination for businesses as well. And VFR and holiday travel as well across that side of things too. So that will still continue. And even on the domestic side as well, we've seen some fantastic campaigns, even locally recently roll out, really sharing some of the great offerings and assets that we have across the nation. So next slide, please. This is from our forecast report, which we released toward the end of last year. So we forecast in that what 2026 will look like and onwards. So 5-year forecasts, 2020, it six out to 2030, sorry. And this is looking at the international visitor arrivals first. Now, in the last batch of the forecasts, given a lot of feedback of people asking about, did you take into account this? What if that happens? Could this influence that aspect? We decided this year to include not only the central forecast, but also a pessimistic and an optimistic forecast. And you can see on the left-hand side of the graph there, some of the influential factors that really, guide those optimistic and pessimistic forecasts there. But the central forecast is kind of what we're focusing on a bit here as well. That central forecast still sees growth in international spend to go on average 4% over the next 5 years, and international arrivals to get up to 10.9 million, so just short of 11 million by 2030. You can see the variation in that though out to 2030, how that looks like across the optimistic and the central as well. And it was really interesting pulling those together because it just highlights more. We're doing the work behind the scenes about what could happen, but we did put it in this time. And I should say these forecast scenarios, they weren't designed to capture potential growth paths in case of extreme events. They were, if things are a bit worse, if they are a bit better, then what can that look like? So they're optimistic and pessimistic within the realms of feasibility. The pessimistic scenario did assume ongoing risk of global conflicts and including what that would entail and what that would play out through as well. So even under those pessimistic forecast scenarios, we still do see a path of growth over the next 5 years on the international side. Jumping to the domestic forecasts as well. So again, this is from our forecast report, and the growth in overnight day trip spend is expected to outpace inflation over the next 5 years. So what we're forecast here, and this chart is showing domestic overnight trips overall, but just talking about that spend side of things as well. We expect it to increase to 130 billion for domestic overnight spend and domestic day trip spend to increase to 57 billion by 2030. You can, however, see the notable variation there in the pessimistic and optimistic forecasting for domestic overnight trips over the course of 5 years. Even then, there is still growth, but it is, much lower when we look at the extreme version of the pessimistic one over time. And again, you can see those core factors there really influencing that, with the key one being that not just economic growth in Australia, but the perception of economic growth and what people's household budgets are, how they're choosing to travel, and so on. What we have seen so far, though, in 2025 and into 2026 is that travel still happens, but it is notably shaped by cost of living pressures and the appeal of affordable domestic and competitive international travel options as well. So that's why we're seeing that sort of bit of a pivot in terms of slightly less day trips and more day trips, but slightly less domestic overnight trips and slightly less spend on those trips as well. We do anticipate that people may be trying to seek greater value for money, not just in what they spend on, but also more benefits from each trip. So combinations of personal fulfillment, connections with family, community, and adventure, and wellness, and a good meal, all in the one trip going forward as well. So might see that greater kind of push to sort of get everything you can within a single trip as well. So that's where we see things moving forward. Conscious of time, I just wanted to wrap it up for people who want to go, okay, what are the 4 things to walk away from? The elevator pitch, if you will, from this. So 4 key takeaways for today. Firstly, tourism in Australia is a massive, growing and important industry. As it started off with, it's nearly 3% of Australia's GDP, 1 in 8 businesses and 1 in 22 jobs in Australia. As we saw on the supply side of things, as Corinne ran through, in 2025, we saw highest number of jobs, highest number of business, highest number of investment, highest number of aviation capacity, and increases, in aviation capacity and accommodation as well. So this is a sector that people are seeing growth in across that supply side, as well as the demand side too. Domestically, changes in behaviour are playing out across overnight and day trips. This is countered somewhat at a total domestic level by the significant increase we're seeing in the number of day trips and the day trip spend. But as I just pointed out there, when looking at the forecasts, the overseas offering is still a strong competitor for Aussies, and more Aussies are travelling overseas in 2025 than before. However, domestic travel is still seen as a huge part of what we do and a big offering as well. Internationally, we saw strong growth in 2025, and positively, this was from a diverse set of markets as well. When we look at the top 5, top 10 that we see, it's a good spread. And there was strong growth in regional spend in 2025 as well from internationals too. So we do see that continuing, and as we've already seen from, as I said, from our friends at the ABS who share the monthly overseas arrivals and departures data, that is still growing as well, as the latest figures show. Looking forward, as I said, the future holds positive fundamentals and growth for the future of Australian tourism. Our latest forecasts show that domestic and international growth is likely to occur, even when we look at the optimistic and the pessimistic scenarios there. And then there's a myriad of factors influencing these that we will take into account. And we actually begin the forecast work again for the next year, probably just next week. So we start looking at these things almost straight away. But still, growth is on the horizon, and it's supported by this strong demand, great offerings that we do have in Australia, major events, and investment as well. So there's a lot that's still coming through in this side of things, and there's plenty more information as well. If you want to download the full report, please do. You can jump on tra.gov.au to get it there. And you can jump to the next slide, please. I just wanted to call out as well that there is always more information coming through as well. So even just recently, well, in the next kind of couple of months, we have a number of releases coming out, as well as some that have just come out this month we wanted to share as well. So we just released the Australian Sustainable Tourism Indicators Dashboard. This was previously known as the Live Dashboard. It still exists in that same format, but we've added a whole bunch of new indicators and breakdown at a state and territory level, I think I saw one question in the Q&A there about nature-based activities. That's actually in the Sustainable Tourism Indicators dashboard now as well, time series and for international and domestic. As I touched on, the March quarter data for tourism labour force statistics just came out last week. This week, we've got the March 2026 results of the Domestic Tourism Statistics and International Visitors Survey. We're soon, next month, going to have the breakdown of what is the GDP of tourism, but at a state and tourism region level, percentage of jobs by every region in Australia, all coming out in late July. And we've also put together a little research paper around using mobility data, what it looks like when a region is recovering from a national disaster and how that shapes up. So I'll be sharing that with you too, along with our regular updates that we also have always happening across the data at tra.gov.au. So if you're ever wondering what's going on, jump on the website, see what we've recently popped up, and there hopefully will be something of relevance there as well. And on to the next slide there, please. So that's it from us today in terms of the run through of what we have in that fantastic report, bringing together a lot of the information. If you haven't yet, can you please jump over to Slido? You can upvote key questions there, or you can, write your own in as well. Jump on there, use code TRA benchmark. And yes, we've got a few minutes, so we will jump into some of those now. Bronte, shall I just have a bit of a look on Slido and see what ones have risen to the top and see if I can answer some of those?
Yeah, sounds good.
Alrighty, great. And thanks everyone who moved their questions over as well. There's no, it's a great way if we can sort of try to capture some of these questions as well. So looking at the questions that have been voted up toward the top, the first one there from Irene, and thanks for popping names in as well. Is the increase in international visitor expenditure due to inflation, or are visitors genuinely spending more? The answer, like any good research question, is both. So it is certainly, as Corinne touched on, the cost of business is higher, and that is obviously being passed on as well. So the cost of experiences, accommodation is more. So yes, that is partly due to inflation. However, even when we take that into account, we can see that visitors are genuinely spending more than what has previously been the case. This is also driven a little bit by visitors are staying longer as well, international visitors in particular, but it is certainly something that we look at in our forecasts as well, in terms of taking that into account and how that plays out through. I think as well, I can see one of the questions down there a bit further as well is, has the increase in expenditure data considered inflation? And yeah, similar answer there. It is a factor. It's also a factor in our forecasting as well that we do look into, which is why we also look at what is the cost of doing business and how that plays out as well. But yeah, so generally international is actually spending more than previously there too. Some of the other ones coming through there at the top. Do Australian tourism investors typically wait for traveller demand before committing to a destination, or can strong airport infrastructure itself attract investment? I would probably have to throw to the states and territories to really unpack that further, to be honest, about what is the order of and running those feasibility studies around when people turn up with the investment and how that plays out. Or to our friends at Austrade in the investment section. They would also have a pretty good idea about this too. From our side, we mostly just ensure that we capture what does that actually look like. And it's a really good indicator, I think, of growth, or perhaps confidence, I suppose, in the industry. Are we seeing the amount of investment growing, not just amount of investment, but also the number of projects, because we know cost is also going up of things as well. So Australian tourism investors, it can be a mix. I know from my side, when working at an STO in the past, we did see some people saying, I can see there's a market for it, we're going to do it, versus others saying, now that there is this great offering, I think there's support for what I'm looking to build. So variation around that as well. Great question there from Razel. It might just be the last one, but it's the last one with a 2-up vote, but we will aim to reply to these in Slido if I haven't been able to cover your question here. So if you've got a question on there, I can see that Bronte's already jumped in and answered a couple, which is awesome. So just the other one there with 2 votes there before we wrap up. Is there anything in the 2025 data that surprised you about where Australians are choosing to go or not to go? I think there's a lot, and this is partly because, you know, we just love data and research and looking into things. And I think it's an inherent part of our job to be overall curious about where people are going and what's going on. Internationally, where Australians headed, I feel that everyone I talk to has either been to Japan or Italy. And I was surprised that Italy didn't land in our top 10 destinations of places where Australians have been going in terms of outbound trips. Japan was number 3, as you saw from Corinne. That was a surprise for me. Domestically as well, I was surprised to see, and this is just, you know, perhaps my not having been able to travel around WA so much, but within the tourism regions where people have been a lot, that the southwest part of WA was one of the top regions outside of a capital region to get to and visit. So makes me keen to check that out more a bit as well. But yeah, there's lots of fun parts of things when looking through the data where we think, oh, that's interesting about where people are going and not going as well. I should say as well, 2025 was impacted by a couple of natural disasters, which also influenced people's travel movements too, which we saw as well. Now, with that, I'm conscious that we've just gone 1 minute over. So as I said, the questions that are there in Slido, Bronte's already been fabulous in jumping in and answering a whole bunch of them. So hopefully that's kind of given you the answers there as well. If not, you can always reach out to us. You can get in touch. Our contact details are on tra.gov.au, or you can reach out to us directly as well. And I hope that's been of great interest. Please do download the full report, and please check in regularly for our future reports and publications. So thank you very much.